American factories capped their strongest quarter in more than 3 years, even with the rate of growth easing in September, as manufacturing helps the U.S. economy withstand slower global markets. While the Institute for Supply Management's index dropped to 56.6 from 59 in August, the gauge's average over the past 3 months was the highest since early 2011, the Tempe, Arizona-based group said today. Readings greater than 50 indicate growth. Other figures showed companies added more than 200,000 workers for a 6th straight month in September, including 35,000 at factories. Resilient motor vehicle sales, spurred by more employment opportunities, and a pickup in corporate equipment purchases are at the crux of the strongest rate of production in 4 years. While Europe is stagnating and China is cooling, domestic demand will probably allow U.S. manufacturing to sustain its expansion. It's signaling a fairly good pace of manufacturing growth, said Michael Moran, chief economist at Daiwa Capital Markets America Incorporated in New York, who projected a drop in the index. With Europe and China slowing and the dollar firming up, down the road we could see some challenges. Stocks sank amid signs of economic weakness in Europe. The Standard & Poor's 500 index dropped 0.7% to 1,958.06 at 12:30 p.m. in New York. European manufacturing. Euro area factories expanded at the slowest pace in 14 months, with manufacturing contracting in Germany, France, Austria and Greece, according to data from Market Economics. The figures, which also showed output prices in the region falling for the first time in 5 months, underscore the mounting challenge facing European Central Bank President Mario Draghi as he seeks to avert deflation while the growth deteriorates. A separate report showed spillover to the UK, with factory growth there at a 17-month low. In China, a manufacturing index from the National Bureau of Statistics and China Federation of Logistics and Purchasing held at 51.1 in September from a month earlier. The ISM index averaged 52.7 in the third quarter, the best showing since the first quarter of 2011 and suggesting continuing progression and upward momentum, Bradley Holcomb, chairman of the factory survey, said on a conference call with reporters. The September reading is a good number, he said. We can't possibly see that the PMI just keeps going up and up before we bump our heads against the ceiling. U.S. momentum. While it is difficult to predict the fallout from slowing global markets and geopolitical unrest, U.S. manufacturing is unlikely to face a setback, he said. The U.S. has continued with its momentum throughout these periods of softness abroad and concern. Demand for motor vehicles remained robust in September as General Motors Co., Chrysler Group LLC and Nissan Motor Company all reported 19% increases in U.S. sales, beating the averages of analyst estimates. In August, sales of cars and light trucks rose to a 17.5 million annualized rate, the highest since January 2006, from a 16.4 million pace a month earlier, according to Ward's Automotive Group. The recent economic indicators remain very favorable, Emily Klinsky Morris, senior U.S. economist at Dearborn, Michigan-based Ford Motor Co., said on a September 3 conference call with analysts. That should provide positive momentum for the economy as we continue in the second half. Labor market. A strengthening job market is helping lift demand. Companies added 213,000 workers in September after 202,000 a month earlier, according to figures today from ADP Research Institute in Roseland, New Jersey. Goods-producing industries, which include manufacturers and construction companies, increased headcount by 58,000 in September. Construction employment rose by 20,000, today's report showed. Payrolls at service providers increased by 155,000. A report in 2 days may show the economy added almost 220,000 jobs in September after 142,000 the prior month, according to the median forecast in a Bloomberg survey. The unemployment rate may have held at 6.1%, they predicted. The median forecast in a Bloomberg survey of 84 economists called for a decline in the US ISM gauge to 58.5, with estimates ranging from 57 to 60. The group's measures of factory employment and new orders eased in September. The ISM gauge of production advanced to 64.6, the highest since May 2010, from 64.5 the prior month. The nation's producers are helping make up for the lack of momentum in construction. The Commerce Department said today that outlays for residential and non-residential projects dropped 0.8% in August after a 1.2% gain. The value of home construction put in place has dropped in 3 of the last 4 months.